All right, good morning, everyone. Fresh off of some weird, wild stuff again, coming to you live. Um, okay, last night's session in the U.S. was a doozy. Uh, we really actually traded terribly. I mean, you can see the entire session. We opened on the highs, closed on the lows. Really negative. I think you got a lot of people probably got caught short toward the end of that session with the Greek announcement overnight. Because of the way the S&P and the NASDAQ and everything traded, I can only imagine that a lot of guys would have been short because looking for the breakdown, the follow-through today. I mean, I myself thought coming into this morning's session that we would, without question, see a sizable correction, not a sizable correction, but I thought we would take out the lows in the States without question as of the close last night. Then obviously just after midnight to our time, we got the Greek debt announcement and Greek agreement with the Eurozone, which is probably one of the most ridiculous political things I've ever seen in my entire life. They just put, the Greek people through 10 days of the most immense hell that they've ever had in their entire lives for absolutely nothing, to accept the deal that was on the table in the first place. Anyway, it is what it is. Obviously, markets are caught a little bit on the wrong side this morning, and so you're seeing a big rally up this morning. Guys piling on. You're not really even seeing like a pile on into risk assets necessarily, but you are seeing a drift up in risk assets. You're obviously seeing indexes taking off here, and some guys willing to put some risk back on and some short covering, I'm sure, in tandem with that. We had initial jobless claims out yesterday, which actually rose to 297 versus the expectation of 275. It's a little bit of negative data there. We've had the start of earnings season now, PepsiCo coming out yesterday, and we're going to see a lot of earnings, obviously, over the next couple weeks. Procter & Gamble selling 43 of its brands for $12.5 billion, but the big story is obviously Greece. There's not a whole lot else going on. Like I said, the trade action in the States wasn't great, and I think that you got a lot of people caught on the wrong side of the market because of it. Moving on to the Asian session, obviously we also saw a big follow-through in Shanghai. It was up more than this at one point. I think the China 300 index was up about 9.6% at one point. The A350 I saw up over 7.5%. So we backed off a little bit off the highs, but obviously a big session out of Shanghai. Hang Seng as well following through with that. We're seeing Tencent this morning, another day of follow-through after a massive day yesterday of somewhere around 8%. We're seeing it add another 2.5% as we speak. Yeah, and then Australia also seeing a little bit of follow through. The interesting thing out of Australia, we're actually up over 1% in Australia earlier this morning. We're only up 0.4% as we speak, but you're seeing a big rally out of the mining sector there. We got an upgrade from Citi on Anglos this morning to just to neutral. It's not an upgrade to buy or anything like that, but an upgrade to neutral from sell. You saw Billy's and Rio tack on about 3% over there in what was actually quite a mediocre market in Australia. And I think that may be something to reckon with here, as our mining shares have obviously been obliterated and everybody's been running out of them as fast as they can. All right, corporate action over the weekend. We're going to see DTCs, TFGs, LEWs, OMNs, and TKGs go ex-div. In terms of market data, we had the Japanese PPI numbers came in a little bit softer than expected. Wholesale inventories out the States, but absolutely nothing to really pay attention to. All right, let's get into the maps. Okay, so the first thing I'm going to show here is the S&P. So I just want to show you what I'm talking about when I'm saying the S&P traded really poorly. So let's look at this on the 30-minute, and you can see what I'm talking about. So we've had a lot of really whippy action here, and yesterday, you saw the intraday chart on the S&P there to start, and then you've really had the S&P yesterday. You can see there opened up at 2070, closed. This is on spot at 2050. 52. We traded down about 4 or 5 points lower. No, so about 3 or 4 points lower than this after hours. So we're all the way down, call it down here, after hours on the equivalent of future, very close to these lows. And the way that we traded, opening at the highs, closing on the lows, absolutely no follow through with what the European session did yesterday. Was really bearish action out of the States. Like I said, I think you had a lot of people that probably were starting to lean on the shorts after last night's action, maybe getting some guys caught on the wrong side of it this morning. So that's kind of one thing to pay attention to. The next thing that I think of consequence, I mean, we talked about this yesterday. This is absolutely ridiculous. The rally we saw yesterday was massive. After a gap up, we just saw this thing taking out the highs and, taking out the neckline of this inverse head, or of this head and shoulder pattern, and very quickly coming up all the way here to the shoulder. I think, before this thing's negated, it's going to have to come up here and test that downtrend there. But bottom line is obviously, this thing ripped right up through the 200-day, up through the neckline, just took people totally out on its way up with the futures buying in enormous size. So you can see here 1, 2, 3 trading sessions. We've gone at 2,700 points, which is not bad. That's about 6% on the index, if I'm not mistaken. And that's not even 3 full trading sessions. That's 2 and an eighth of a trading session, call it. All right, let's look at Discovery. Discovery yesterday kind of breaking out a little bit above 130 here. Definitely got a little bit of an inverse head and shoulder going on there. You can see here, left shoulder, right shoulder, that's head, obviously. So massive target here. I think you could see this thing potentially trade up around 140, maybe 142 even, if this thing continues to play out. We were trading the day before. This is ridiculous. We were trading at 121 for, I think, an hour or so in the morning yesterday. And then all of a sudden we were at 131 on the close just the next day. That kind of move. And without actually having a ton of volume is insane. Next one we'll look at is Standard Bank. Very similar kind of action and move to Discovery. You can see here, if we take out, just get this line right, run this all the way across because it kind of works out a little bit. It was looking like it could have made a little bit of a head and shoulder there. Next thing you know, it's looking almost the opposite of that, maybe inverse head and shoulder style. But bottom line, if we get through about 160, 150, 160, 150, I think is the level, then this thing could really have a run to the upside. That could be the breakout that people have been waiting for there. We can look at Rimgrow. Rimgrow, same sort of thing, a massive level here, 260, which we closed right on last night. You can see that we had a tiny close, like a couple points above it about a week ago, and but we're very quickly touching that again. I think we get above 260. This thing's probably off to the races today. And we've got to keep in mind everything's going to open up right now with futures trading up 500 points in the open, which futures up 500 points in the open is about 650 points on spot because of the fact that futures closed at such a premium to where spot was yesterday. All right, the next one is MediClinic, and this is maybe a really weak left shoulder, but kind of an inverse head and shoulder pattern as well, above 105.50. This thing can also take off. We really closed right at it, 105.65. But like I said, everything's going to open up this morning, so this thing could very quickly trade up to about 112 as a target in MediClinic. And the last one I'm going to show, U.S. listing, we're going to look at Intel. I'm going to back this out and look at a 2-year chart in Intel, and you can see beautiful head and shoulder pattern. And Intel really was taken out yesterday. Poor trading session out of Intel yesterday, down about 2% if I'm not mistaken, and a massive target to the downside. I know that a lot of I think the Bloomberg consensus from a lot of the investment banks are lower than this target, than the current price anyway, which is probably a bit rare for us, a stock with this kind of rating, one of the big, big breadth, very widely held names. But anyway, keep this one in mind if you're punting out the States. And that's it for today, guys. Good luck out there.